lest those of you who remain grow increasingly impatient, it's not lost on me that this presentation is the only thing that stands between you and the first cocktail or refreshment of the weekend. So I know I must be concise and brief. And in fact, I prepared 9 pages of comments. I'm about to throw it out, and I will condense it down to the bottom line so that we do have a few minutes for Q&A, which I think will be more interesting. First, I'd like to thank all of you at CDG for your wonderful hospitality. This has been, for me, a wonderful day. It's my first visit to Casablanca, and you've ensured that it will not be my last. Secondly, I'd like to thank you for the opportunity to speak. I'm deeply, deeply honored and know with confidence that this is building the foundation for a very promising future for Morocco. All the pieces that you're putting together, embracing innovation, will increase capital efficiency, which will attract more capital, which will create jobs and prosperity. So I applaud your initiative. Before I make my abbreviated comments, I'd like to give you a little bit more detail on my background so that you understand the perspective from which I speak. As was mentioned, I started my career at Salomon Brothers in 1979. I worked on the finance desk and traded repo, which is a very important component of an efficient sovereign debt market. I then started what was then one of the first trading desks in interest rate swaps, which was the predecessor to OTC derivatives in 1984. Subsequent to that, I was treasurer and managed the balance sheet of Salomon Brothers for 8 years, $150 billion balance sheet, and then I ran the global fixed income derivatives business. After that, I was recruited to Tudor Investment Corporation, which is a US-based alternative asset manager with over $10 billion of client assets under management, operations in the US, the UK, and Singapore, and Sydney. And there I managed risk, treasury, operations, technology. So my perspective was, in effect, as we might say in the United States, right in the engine room. I was there for the past 33 years as many of these products that we've talked about today were developed. And so I had a close view of the benefits and the risks and the hazards. And so what I thought would be helpful is to talk briefly about at least some of the lessons that I learned, the do's and the don'ts. And I think I can boil it down to 4 key points. And then I'd like to talk for a moment at the end about why I think Morocco and emerging market corporates in general offer a great opportunity, particularly for investors in developed markets. So as has been mentioned earlier today, derivatives and innovation was a tremendous, a very powerful tool in increasing efficiency. Properly used, it reduced borrowing costs and it reduced risks by enabling users to better match their asset and liability. And so that was how they were used for the first 10 years or so of their existence, from the mid-80s until the mid-90s. After that, whether it was a function of management's inattention or just a temptation of greed, they began to be used to excess, increasing leverage above levels that it should have been, or to speculate. And the consequences, as we know, are pretty well chronicled. We had the failure of long-term capital in 1998. We had the failure of Enron in 2001, WorldCom in 2002, and of course, Bear Stearns, Lehman Brothers, and AIG in 2007 and 2008, the mortgage crisis. So in each of these cases, derivatives were used to not just match asset and liability. If they'd been used to do that, things would have been fine. But they were used to speculate, to hide or take additional leverage, and that's where the peril lies. So my first lesson is keep it simple. There's no need to get complicated in the use of derivatives. The complicated structures are an invention of Wall Street. They're really designed by Wall Street to increase their margins. They're opaque, they reduce transparency, they make things difficult to price, and so that allows them to increase their margin. No need to do that. Stay simple. Number two is match asset and liability. Always take care when you're using a derivative or issuing debt to match your asset and liability. A perfect example here would be if you're a Moroccan corporate and you're exporting to clients who pay in dollars or pay in euros, then you can issue debt in euros or dollars. If your client base is solely domestic, your debt should be issued in dirhams. If you're funding long-term capital investments in fixed assets or permanent working capital, then issue long-term fixed-rate debt, particularly when interest rates are low. So just match asset and liability. Very, very simple. Third rule, pay attention to the details. Number one, counterparty credit. Make sure that you're dealing with very high-quality counterparty. Don't be tempted to go down the scale in credit quality for a basis point or two. In the long run, these are 5 and 10-year transactions. Saving a basis point or two will pale in comparison if your counterparty goes out of business. Pay attention to your counterparty within your counterparty. Oftentimes, a highly rated, good-name bank will give you a subsidiary. It's important, if you take that subsidiary, to get a guarantee of the parent. And then lastly, on the contract, make sure that it's symmetrical. By that I mean, make sure that what the dealer asks you to do, you ask the dealer to do. These are bilateral transactions. So, as we say in the U.S., what's good for the goose is good for the gander. So using a swap, make sure that what they ask you to do, you ask them to do. And then my last rule, which is very important, and I learned this when I was treasurer of Salomon Brothers, is borrow when you can. Sounds very simple, but human nature is, we have a tendency to extrapolate our current condition. So when you're in an environment where you can borrow and money is cheap, tend not to borrow a little bit extra because you think you will always be able to. But as we know, markets are cyclical, liquidity is cyclical. So when you need the money sometimes, you may not be able to get it. So particularly when rates are low and money's plentiful, stockpile a little extra money. Go ahead and borrow it. Convert it to floating so it doesn't have too much of an opportunity cost. Or if rates are very low, keep it in fixed so that you'll have it for a rainy day. So those are, I think, the 4 rules that keep you out of trouble when practicing innovation. Don't use it to speculate, and don't use it to apply excessive leverage. Now, I'd like to turn to a few slides and just change my focus away from the instruments of innovation, why I think emerging market corporates, and Morocco in particular, represent a very attractive value for developed market investors. And that's, in fact, why I left Tudor, my firm, at the end of last year to help found Zafrano Capital, which will invest in emerging market corporates. First of all, from a very macro perspective, the emerging markets have much more sound footing at the sovereign level than developed markets. This chart on the vertical axis is a ratio of debt to GDP, and on the horizontal axis is fiscal deficit as a percentage of GDP. And interestingly, you'll note the developed markets are in the top right-hand quadrant, whereas all the emerging markets are in the lower left-hand quadrant, and Morocco is right there with debt to GDP below 50% and a fiscal deficit of less than 5%. So they're much more solid, on solid footing than our developed markets. Secondly, their FX reserves have grown significantly in relation to those of developed markets. This chart on the left-hand side is dollars in billions, and then on the horizontal axis is time over the past 11 years. As you can see, emerging FX reserves, which is the blue line, have grown to roughly 4 times that of developed markets. Thirdly, growth in GDP. 2010 in the first block, emerging market GDP is roughly 35% of global GDP. By 2020, JP Morgan predicts it'll be roughly half of global GDP. And in 2030, it'll be roughly 65% of global GDP. And one doesn't have to, the math is fairly simple. If you look at the growth rates here in Morocco, GDP is growing at 4 to 5%. In the United States, we're lucky to be growing at 2 to 3%. So just take that compounding over time, and emerging markets will catch up. Now, on the micro level, what's interesting is there's a perception that emerging markets are riskier. The fact of the matter is they are no more risky than the high yield debt market in the United States. This chart shows the defaults of emerging market corporate debt. The left hand in the blue bar, the red bar is high yield, U.S. high yield bonds, and the yellow is high yield U.S. loans. And you'll see that they're roughly equivalent in terms of default rates. And I should point out that the variance in 2009 and 2012 is solely attributable to Kazakhstan. So a fairly unique one-off existence has caused that deviation. Interestingly, despite the fact that the risk is largely the same, there is a good premium still in emerging market corporate bonds. Over the past 3 months, emerging market corporate bonds have out-yielded high-yield bonds in the U.S. by roughly 200 to 300 basis points. So they represent good value, which is precisely what Zafrano is looking for. And lastly, the flows into emerging markets have been very good, and they will continue to be so. So the fundamental backdrop, both from a macro perspective and a micro perspective, is very, very good. And I think when you take that and just consider what this conference is all about, the fact that Morocco is embracing innovation, which will improve its efficiency. And I talked to the folks that today, the team at CDG and others during the break, and it's clear to me the talent that's come back to Morocco that has learned these techniques and we will bring them back. That intellectual property coming back is going to be a powerful engine. And so investing in proper regulation and transparency and governance will attract capital, which will then facilitate investment, job creation, prosperity, and growth. And so it's very exciting what's going on here in Morocco. In Morocco, I think you should all be very proud of it. As I said at the beginning, I'm delighted to be a participant in what I see as being a foundation to build a very, very solid future. So thank you again for the opportunity to speak.